Good morning, everyone. On behalf of Vetiva Capital and our media partners at Frontier Africa Reports, we'd like to thank you for joining us on our breakfast meeting today. It is Thursday, the 29th of April, 2021. Please note that this meeting is being broadcast live on our Vetiva online page on Facebook and is also being recorded. The audio file may be shared with third parties. The meeting is set to last for 30 minutes, inclusive of Q&A if time permits. We will now start off with the equity space with Sharon. Good morning, Sharon.
Good morning, Chidoze, and good morning, everyone. Thank you for joining us. We start off looking at performance of some market across West Africa. We start off from BRVM with the index sustaining positive run after a 75 bips upward close. It was a generally upbeat session with volume and value traded improving just as the market breadth ended in the green with 18 gainers and 8 losers. Nestle Cote d'Ivoire led the gainers chart to sustain its positive run with a 7.27% day-on-day close. We saw BICI Cote d'Ivoire, however, reversed gains in the previous session to close 6.09% lower on the day. We expect further upward close in today's session with pocket of profit taking in that market. We've seen a couple of days of gains in BRVM, and the market seemed to be very well on to sustain this upward close. Quickly moving to Ghana, the composite index closed significantly in the green with a 4.03% upside on the back of 8.33% price appreciation in MTN Ghana. The stock has now returned, speaking to MTN Ghana now, the stock has now returned 8.33% weekly gain and 22.35% monthly gain. Total Petroleum was the other gainer we saw in the market with 1.56% gain in that session. Speaking to activity, volume and value traded also improved significantly with MTN once again dominating with about 805,550 shares being traded. So our top picks in the market still remains MTN Ghana as well as Society Generale in the banking names. So we move to Nigeria. The midweek session closed in the red as the ASI declined marginally by 1 basis point for a second day of negative close in the week. Gains in ETI, Nigerian bureaus, and international bureaus alike were insufficient to give the ASI a positive close as GTB and Access, amongst others, pulled the index lower. The market maintained its quiet posture with fewer trades going through on the day. Though the session recorded marginal improvement in volume and value traded by just 3 and 8% respectively, local investors are still largely underweight equities in Nigeria. On the part of foreign investors, we've seen that they continue to stay away from the market as they seek alternative means for fund repatriation since the challenge with FX illiquidity still continues. Then the session the session saw just the oil and gas subsector closing higher on the back of a 3.64% gain in Seplat, as other subsectors also closed in the red. As we move closer to the end of the month, we saw more Q1 results released yesterday from Julius Berger to UAC Properties, GSK, and the likes. United Capital also released their results. So for United Capital, we saw that gross earnings and PAT grew 63% and 67% year on year, respectively. Investors' reaction was, however, muted, with just a 1.59% gain in that session. So moving into today, we believe more Q1 earnings are expected, though we do not expect significant reaction from investors, as we have seen with most names. And then with NTB yields on the 1 year paper improving by 75 bips to 9.75%, we expect investors to continue to favor the fixed income space and underweight equities. That'll be it for equities market. Thank you.
Thank you, Sean. We will now move to Amorige for fixed income and currencies. Good morning, Amorige.
Good morning. Good morning, everybody. I'll start with the money market. The money market is still very liquid. Yesterday, opening figures was 435 billion short. When we took out the CBN repos, system was estimated about 249 billion short. As a result, money market rate traded between 13 to 15%, as the long-awaited FAC inflows did not come in during the early hours of yesterday's trading session. However, towards the close of business yesterday, some of the expected FAC posting hit the system, causing rates to trade at lower levels, around 12% levels. So our expectation for today is that the money market will trade at lower levels in spite of the anticipated OMO auction, as the outstanding FAC credit hits the system to improve liquidity. Moving on to FS market, the parallel market remains stable to trade at lower levels, as the result very few trades were consummate across the benchmark curve. Moving on to FS market, the parallel market remains stable to trade at 485 naira to a dollar, while the earning window traded at 422 naira to a dollar, closing at 411.25 naira to a dollar. The earning industry turnover decreased slightly to close at $33.55 million yesterday, from the $48.42 million recorded on Tuesday. We expect the naira to continue to hover around these levels. Moving on to the TVs market, the TVs market traded on a very quiet note yesterday, as players awaited the auction results. Bid and ask spread remains very wide. As a result, very few trades were consummated across the benchmark curve. Also, the system is still very tight. This also contributed to the few trades that were seen across the curve. The major highlight in yesterday's trading session was the NTB auction. At the auction, the DMO oversold the offer amount of 88.46 billion by 46%. The total amount that was allotted at the auction yesterday was 129.46 billion. The bulk of the allotment was on the 1 year paper, as the DMO oversold the 1 year paper by 63%. The 91 days maintained to close at 2%. The total amount on offer there was 11.388 billion. Subscription on that end was 10.53 billion, while the total allotment was 7.19 billion. For the 182 days, the total amount on offer was 6 billion. Subscription was 9.05 billion. Allotment was 6 billion. Rate also maintained on that end to close at 3.5%. For 364 days, the offer amount was 71.07 billion. Subscription was about 223.35 billion. Allotment was 116.27 billion. While the total amount that was sold was 116.27 billion, and the stop rate improved by 75 basis points to close at 9.75%. We expect the TVs market to trade on a very active note today, as some players will try to book quick profits on their auction winnings, while others will try to fill their lost bids in the market. I'll conclude with the bonds market. Yesterday, the bonds market opened on a very quiet note, We, however, see activities pick up subsequently as demand for the long-tenured bond filtered into the market. The 2029 lower maturities witnessed increased bearishness. However, there was no buy-side interest on that end. We also saw the 2045 and the 2049 trade at around 14% levels. We expect the bonds market to trade actively today as players trade post-auction sentiment. That'll be all for fixed income. Thank you very much.
Thank you very much, Maria. We will now conclude with Temple from Frontier Africa Reports. Morning, Temple.
Good morning, and thank you for listening. We start off from South Africa. We all know of the inquiry that has been taking place in South Africa regarding the corruption charges against former President Jacob Zuma. Yesterday, noteworthy is the comment from Ramaphosa, the current sitting president of that country, who said that the ANC could have done a whole lot more in terms of what has been happening, what happened under the Jacob Zuma administration. He appeared in his capacity as current leader of the ANC and, of course, the president of that country. Of course, we know that this is a rare case of a sitting president appearing at an inquiry, but he is expected to actually be asked what he knew about the alleged corrupt practices while serving alongside Jacob Zuma, you know, and to give his own account. So that comment was like setting the stage as to what to expect from him yesterday. And we know that he's also been fighting a couple of other loyalists of Jacob Zuma that are still in power, like the Secretary General that has also been given a 30-day deadline to exit the seats there. So we are tracking that and to see how that will affect or speak to the macroeconomic situation of that country, coupled with what we already know around about the vaccine and, of course, the COVID-19, how much of disruption it has brought to that economy. In the northern part of Africa, you've got Egypt's Financial Regulatory Authority exempting Taya Misar Fund from all taxes. These exemptions actually seek to help the fund carry out its development objectives and service projects. There's going to be removal of all sorts of charges and taxes on that from that particular company, because it's like a social investments company institution for Egypt, which does a whole lot of projects in the rural areas, basically to serve the poor people, improve living conditions in slum areas, and, of course, help to put some water projects together. So that we all know that the Parliament already gave approval on Tuesday. The legislative amendment has already been announced to that effect, and now the FRA has now given its nod to that development as well. In Kenya, there's a report for the first quarter of the year on avocado exports, which surged by 73% to over 4.6 billion shillings for the first quarter of this year. We now understand that Kenya is now ranked as the 8th global producer of avocado, and this period they actually exported over 26,000 tons in the first quarter of the year. Finally, KenGen, which has been owed some over 23.9 billion shillings by the Kenya Power PLC, is to get that fund repaid any moment from now. The Kenya Power has actually owed over 23 billion naira as of June 2020, June last year. Over 23 billion Kenyan shillings, actually, as of June last year. We understand that the plans are in top gears now to clear that debt. They also owed a couple of other power producers the sum of 20.5 billion shillings. The understanding is that the government is now ready to clear these backlogs. Of course, you know that election is in the air in Kenya, so every government seems to be trying its best to put up a better posture so it can also appeal more to people and get itself more enduring. Thank you for listening to our headlines for today, and have a lovely day.
Thank you, Temple. We have now come to the question and answer portion of the meeting. If you would like to speak, you can raise your hand on the app and you'll be given an opportunity to ask your question. Or if you may use the chat box or the Q&A box on Zoom, whilst those joining us on Facebook can use the comment function as well. See, Luke has his hand up. Luke, you can go ahead and speak.
Thank you, Chidozie, and good morning, everyone. So I don't really have a question. So this is just to comment on the just released results from Seplat. That's the Q1 results of the company. So going by the results, we saw a 16% increase in Seplat's revenue in Q1, from $107 million last year to about 152. From $124 million last year to about $152 million in Q1 this year. We saw like a 16% increase in oil revenue from $107 million to $124 million. And that was mainly driven by the increase we saw in oil prices. I mean, looking at Q1 average, net average oil price was around $60. That's 20% more than the average we saw in Q1 last year. Production was relatively flat at around $2 million, at around 2 million barrels in Q1. For gas revenue, we also saw an improvement along that line. Gas revenue was up 16%. That was mainly driven by the 27% increase we saw in gas outputs, given that average gas price during the quarter was almost flat. Further down the income statement, we saw an improvement in the company's management of OPEX. OPEX declined by about 42% year on year to about $18 million. And last year, given the fact that the company was able to pay down some of its debt, as a result of that, we saw like a sharp decline in its finance cost, which declined from about $21 million in Q1 last year to about $16 million in Q1 this year. Overall, the company was able to make a profit of $24 million, which is a significant improvement from a loss of $104 million last year. And I believe that was what's really informed the board's decision to announce an interim dividend of 2.5 cents per share. The qualification date for that is 12th of May this year. So in subsequent quarters, I mean, we expect to see further improvements in the company's revenue, mainly driven by oil revenue, given that we expect oil prices, especially for Brent, to remain resilient at 60 plus levels. And we expect that to continue to support the company's bottom line going forward. In terms of our recommendation, we need to revise our estimates, to capture the misses in Q1. However, given the fact that the results, came in largely in line with our estimates, we do not expect to see material changes to our target price. Currently, our target price is around 686 naira. And for Seplat, really, the interesting thing to note is also the fact that we've started seeing improvements in their operating cash flows. That was significantly impacted last year due to the weaker oil prices we witnessed as a result of the pandemic. But going forward, we expect to see, improvements along that line. Yeah, I think that's something up for Seplat. Thank you.
Thank you. I see we have no further questions today. That means we have come to the conclusion of our meeting. On behalf of Vetiva and our media partners at Frontier Africa Reports, we'd like to thank everyone for joining us today. We continue to encourage everyone to keep safe, and we look forward to having you join us again tomorrow morning at 8:30. We hope everyone has a good day. Good morning.